What's up guys, my name is Ignas, welcome back to the channel. This week we made a dividend comparison on several freight names, and FedEx had just a bit better fundamentals than the other two. So I have right then decided to add into the position already. So now I'm holding 1.7 of a share of FDX at an average buying price of $175.55. Unfortunately the stock is now at $150.14. So I am down for $43.58 on this position, lower for 14.74%. The position now takes 4.14% of the portfolio, and that is 36.15% of my exposure in the industrial sector. But what I do love about buying dividend stocks is that no matter where the price is going, the dividend income is definitely going higher. So FedEx is paying $4.60 in dividends on an annual basis, and for this position I'm receiving $7.89 every year. So I have already added into FDX, but to make sure today we'll be taking a deeper look into it. So we have the price chart opened, and FedEx was a real poor performer this year. On the year to date the stock is now down for 41.93%, though zooming to the last 5 years is not that much better, with the stock down for $80 per share or minus 34.85%. Company's market cap is now at under $40 billion US, and with the stock going lower we now have the price to earnings ratio at 11.04, and the dividend yield is going higher, currently at 3.06%. So in order to take a deeper look into it, first we'll check financials and fundamental ratios, then what analysts think the stock will be trading at next year, after that what Superinvestors and insiders are doing with it, and lastly we'll get to the technicals of the price chart. Let's see if we can find something we should be worried about. An early thumbs up would be very much appreciated, and with that out of the way, let's start. So the first metric we are taking a look into is revenue, and this is FedEx history of the last 5 years. Back in 2017 they were bringing $61 billion on the trailing 12 months. Then a year in 2018 it increased to $67 billion. In 2019 we had it at $69.7. And then interestingly enough, when the pandemic started in 2020, revenue started accelerating up, so we had it at $71.5 billion, and in 2021 we saw the largest increase for the quarter year over year, plus 30% to $22.5 billion for just one quarter, adding up to $84 billion on the trailing 12 months. Now recently the revenue is slowing down a bit, but still going higher over 5% year over year, now at $94.8 billion on the trailing 12 months. So there has been 3 quarters in the last 5 years where revenue have in fact decreased year over year, but recently they have been moving higher consistently. The next metric we are taking is the price to earnings ratio. So back in 2017 the stock was trading at a PE of 18.83, then in 2018 with earnings going up, PE ratio went lower to 12.96, then in 2019 there was this earnings drop, and the stock price also moved lower, so price to earnings skyrocketed to 392, and we have one quarter in 2020 with negative earnings, so here the PE ratio is at 0. But then by the end of 2020 earnings went back higher, so the PE ratio was at 23.08, and with the price surging higher to over $300 in 2021, but earnings also jumping up, price to earnings still went lower to 15.83. This year as the price stumbled down, the price to earnings also has been moving lower, now at 11.27. So it looks like that in the last 5 years, we had the price to earnings between 20 and 10, but still closer to that higher side. So buying right now at a PE of just over 10 looks to be a decent opportunity getting into. Now let's take the number of shares outstanding. So in 2017 it was at 272 million shares, then in 2018 it went down for 1.1% to 269, and in 2019 another decrease of 2.6%, bottoming at 262 million shares out. In 2020 we saw it moving up a bit, higher 2.67% for the quarter year over year to 269 million, but then turning back lower in 2021. And now with the most recent quarter in, we have the number of shares out at 262 million. So in the last 5 years we had this roller coaster of a ride, but overall the direction was down. from 272 million to 662 million shares. So in 5 years they bought back around 10 million shares, which at the current stock price of $150 per share is a stock buyback of $1.5 billion US. Not a huge decrease, but still a decrease overall. Now that we are focused heavily on the dividends, let's take a look into the dividend payout. So in 2017 the payout was $1.77, then in a year in 2018 it was increased to $2.31, in 2019 a smaller increase to $2.48, and then 2020 $2.53 per share. But after that it started accelerating up. 2021 we had it at $2.85, and now this year it jumped higher to $3.78. So there was the slowdown in payout increases in 2019, but still the dividend payout has been consistently moving higher in the last 5 years. Now this year the stock price also been moving lower, so in turn the dividend yield seems to be surging higher, and we'll take a further look into that with my dividend watch list on Google Sheets. So we are now in my watch list, and this is here the tab for FedEx. We have its dividend yield history for each quarter of the last 5 years, and out of that we calculate that on average the stock was trading at a dividend yield of 1.37%. So the worst time to get into the stock was back in 2017 at a yield of 0.79%, under the 5-year average for 42.24%, but this year with the stock selling off, the dividend yield surged to 3.01%, which is now over average for 120.09%, levels that we haven't even seen in the last 5 years. So it seems quite an interesting opportunity to get into the stock right now, at least for the dividend yield. Now if you would be interested in doing a similar analysis on another dividend paying stock yourself, you are able to access this watchlist by following the second link at the top of the description. Otherwise, feel free to add a ticker symbol in a comment below, and I'll consider adding that to the watchlist myself. Maybe you could share some interesting opportunity available in the market that I'm still missing. So we have checked into the history, but how about expectations? Where the analysts think the stock will be trading at next year? On Yahoo Finance we have price target information from 27 analysts. The targets range from the lows of $125 to the highs of $258 per share. On average that comes in at $193.70, and currently the stock is trading at $150.14. So if we assume that next year the stock should be trading at the average target, then we are looking to an increase of the share price at around 29%. Now let's take another angle. Here we have earnings estimates for next year from 28 analysts, and on average they predict that FedEx will be bringing $18.08 in earnings next year. If we assume that the P/E ratio remains the same, then we are looking to an increase of the share price at around 24.7%. So overall analysts seem to be quite bullish, expecting that the stock will be going higher up to 30% next year. Now it's time for Superinvestors. So currently we have 8 funds holding the stock, 2 reduced on their positions, 2 are holding, but 4 of the funds are going long. So Soundshore started a new position with 107,000 shares, taking up 2.52% of their portfolio. Then Austin Capital Management 2x on their position, adding 133%, currently holding over 100,000 shares and taking up 1.27% of their portfolio. And then another new position from Tweedy Brown Value Fund, where they bought 21,000 shares, and that is taking 1.26% of their portfolio. Now there was one sale that is interesting. Dodge & Cox is the largest holder here, with 10.8 million shares, that takes 2.26% of their portfolio. So they have sold a few shares, but the reduction was very small at 0.14%. So not a huge decrease after all, and overall we can say that Superinvestors are definitely bullish on the stock. Now there has been some moves from insiders too. In the last 6 months they managed to make 6 buying transactions, totaling at $560,000, and then sold 6 times too, adding up to $11.5 million. So we can say that insiders have been net sellers of the stock, but still they made 6 long trades, which is not something that we at all see very often. Now the last part we are taking a look into is the price chart. So back in February of this year, the 200-day moving average went under the 300, and then in the beginning of March, the 50-day went under 100. So all 4 of the moving averages were pointing lower there. There was a bit of a support at the $200 level, and in June we actually bounced a bit over it, with the stock price going over the 200-day moving average, and on the 24th even reaching the 300-day moving average. That seemed to be a decent resistance, as the price kept moving sideways together with the 200-day moving average for a few months, then in the middle of August bounced under the 301 again, and after started stumbling back lower. In September we had it back at the $200 level, and it traded there for a few days. But then we had the earnings drop, so the price went down around 25% to $155 per share, the relative strength index went to oversold at 18.8, and the bearish gap between the MACD lines went on the increase. It continued on for a few weeks, but then on October 3rd we had the relative strength index going closer to 30, getting out of those oversold levels, and there was a bullish crossover in the lines of the MACD. Now in the last few days the stock is going lower again. The relative strength index is just over 30 at 33, and unfortunately the 12-day moving average of the MACD is slowing down. So with both the relative strength and the MACD pointing lower, and the moving averages going downwards, I believe that there could be more red days going further. So not the best position to get in for a trade. So now we have went through all the metrics I wanted to take a look into, and we can make a quick recap of what we found. So overall we saw only 3 down quarters, but in the last 5 years revenue has been consistently going up. Since they are showing earnings and the price is moving lower this year, we now have the price-to-earnings ratio lowest it has been in the last 5 years. It seems that they aren't focusing on stock buybacks, but still in 5 years managed to decrease the number of shares out by exactly 10 million. Though they have been focusing on increasing the dividend payouts, that was going up consistently in the last 5 years, and with the stock price moving lower this year, we now have the dividend yield higher than its 5-year average for 120.09%. Analysts are also bullish, as they expect that next year the stock price will be going up from 24 to 29%. Looking into the Superinvestors activity, they have been starting new positions in the stock and are net buyers, and though insiders have been selling more than buying, at least they are making those long trades, which is not commonly seen in many other stocks we've looked into. Unfortunately, after checking the chart, it's not promising. Both the MACD and the relative strength index are pointing lower, and the stock has been dropping like a stone recently, so I don't believe we are getting a bottom anytime soon. So that was it. Make sure to support the channel and leave a thumbs up under the video. A few weeks back I made an update on my dividend portfolio in Revolut, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side for today. Thank you for watching, and I will be seeing y'all in the next one.